Good afternoon, everybody. Uneducated Economist here. It's great to see we already have 17 people who have joined in on this live stream before we even got started. Thank you so much for hitting that like button when you came into the live stream. By hitting that like button, we'll get more people to join in on this video. And it's always more fun to have people joining in to join the chat and make that chat more exciting to be part of. All right. Talking about the lumber industry today and talking about how mills are in crisis. Over the last 6 months to a year, I have been reporting on consistent mill curtailments and mill shutdowns, depletion of inventory levels. This is something that is not new to us. Now, last month, August 19th, there was some more tariffs that were put on Canadian softwoods lumber. And that's a major import to the United States from Canada. The United States and their softwood consumption gets about 20% of that from Canada. And so anything that's really taken place within the Canadian lumber industry has a major impact on what's going on here in the United States, especially when it comes to lumber prices. So when you see things taking place within the Canadian market, or at least in that export-import market coming to the United States, anytime you ever have a disruption within it, you are going to find that that is going to impact the lumber prices or the availability of it. I even had one of our vendors just recently give us a bit of a warning saying, hey, this tariff is going to impact prices. And this is what they had to say. The U.S. Department of Commerce raised the tariff duty on Canadian softwood lumber to 14.54% from the current 8.05%, an increase of 6.49% effective August 19th. Softwood lumber is defined as any tree bearing cones, which includes, but is not limited to, cedar, hemlock, spruce, pine, fir, and others. Manufacturers like Terminal and Western Forest Products have not raised prices yet, but have indicated increases are imminent. Other mill partners have already applied price increases. So it's not like this is something that is a secret. This is something that we have talked about quite a bit. But it's also something that I don't think a lot of people are going to understand what is really happening once we see, or if or when, right, we do see the interest rates come down and that spark of investment going into new home building. Now, this is something that has been promised, through political, promises or whatever. I just look at it for the reality of the situation, right? If you have a moment, right, in which that the demand for houses is very prevalent, like people want homes, right? Now, they can't afford homes, but they really do want them. They are sitting on the sidelines. What is getting them to sit on the sidelines? Interest rates being too high. They can't afford the high interest rates. This is what you hear a lot of, right? And I'm just kind of like, going over the narrative. As people are feeling this, they think once the interest rates come down, they will then have their buying opportunity to get into a house. When the interest payments come down, they will be able to afford those higher payments, afford those payments on the lesser interest rates. And this will then give them the ability to get into a house, right? So this is kind of like the idea behind it all. If you bring interest rates down, you are going to increase the demand. It doesn't increase the supply. That's important to understand. If interest rates come down, it increases the demand. It doesn't increase the supply. Now, what will increase the supply is investment going into building new homes. Now, this is something that becomes very interesting in like almost the trigger moment that you have to look for, because a lot of people will say, no, if the price is too high, you just don't buy. The answer for high prices is high prices, right? Because people will just stop buying and the prices come down. This is what a lot of people will say, but they don't take into consideration that the moment that a contract is signed, right, that project needs to go forward. That's no longer elastic demand. That is inelastic demand. A contractor signs a contract promising to build a house. They must go forward with that house, with the purchase of that lumber in order to build that house. And if there is a depletion of lumber that has taken place within the markets, and you have this spark of investment that goes into it because of the lower interest rates, then you're going to find that the contractors who are now contracted to build inelastic demand will then send the prices of a depleted inventory much higher. This is something that you can look for. It is now gearing up to take place. I talk with vendors all the time talking about, like, where is the inventory levels? Are there any lead time extensions? Are there any prices that are moving that are not something that would be normal price movements? Are you seeing inventory depletions? I ask so many questions of my vendors on a regular basis, and you can hear within their voices, you can tell within the things that they are saying that they are looking at a very precarious moment that is coming up. Right? Like the idea of plywood itself, right? OSB, very, very short supply, very difficult to find. All of a sudden, boom, there's OSB available. Now, is it going to be consistent? No. A bit of it came in. It wasn't in high demand at the moment. The price came down, but it's not going to stay there as the depletion of it almost evaporates the inventory immediately. Then, once it's gone, the prices shoot back up. And this is what we are experiencing right now. You think about it, there's not a lot of new home starts. Like, look at building permit issuance. Look at building new home starts. They are very much down comparatively to where they were over the last couple of years. And so when you think about the new starts that have depleted, that's not a lot of demand for this material. And if that lack of demand doesn't have a whole lot of production going into it, eventually you're going to find that the inventory is just not available. This is what we are experiencing on a regular basis, because people come to me all the time and they say, man, you don't understand. I go down to my local lumber yard and it is stacked with OSB. Yeah, in your area. That particular area of the country does have a flood of OSB going to it. Our area up here doesn't have a flood of OSB. But when it does come in and it is available for us, it gets nabbed up right away because it's not something that is very prevalent within our market. So again, like, the inventory levels that are out there are very, very short. Mill curtailments, mill shutdowns, inventory depletion has been running rampant for a year. Very much similar to what we had experienced in 2019. Like, a lot of you remember, I was reporting on mill curtailments and shutdowns taking place up in the British Columbia area. We had seen lumber prices go up to $650 per thousand, which at the time was their all-time high. Canadian mills were in something called salvage mode as they were dealing with an infestation of these blue pine mountain beetles that killed off a lot of their forest. They went in and harvested a lot of these dead trees, milled it up, and sent that lumber down into the United States. Well, when the salvage mode came to an end, and that high price of $650 per thousand then set stumpage fees at an incredibly high price, because the way the Canadian government works is they take the prices of the previous 6 months to establish what the stumpage fee is, which is the fee that they charge the loggers for cutting down a tree. They apply that to the current market, which may not have the prices to be conducive to that higher stumpage fees. So basically, they establish the stumpage fees off of the previous 6 months' prices, but then now the new prices may not reflect those high prices, but yet the stumpage fees are elevated, and that's the condition that those markets were in at the time. They were dealing with this high $650 per thousand. Salvage mode came to an end. Stumpage fees shot up to the roof, and the input cost going into these mills was too much for them to operate, and they started shutting down like mad. This tightened up the inventory in an incredible way. So by the end of 2019, there was very little inventory out there in the market. COVID hit, shutdowns, even more inventory depletions, and stimulus checks came out, and it zapped all the rest of the inventory, and prices shot to the moon. We saw it go up to $1,700 per thousand. Considering that we're at just shy of $500 per thousand, $1,700 per thousand is ungodly high. And now a lot of people think, yeah, they were raping the people and the mills were, just all this greed and stuff. A lot of people don't realize there wasn't much lumber selling at $1,700 per thousand. They might have had it priced at that, because that's what the demand from the inelastic, that's what the markets were going with, this inelastic demand, shoving it up to 1,700 per thousand. But only the people who were absolutely required to buy it were buying. Everybody else was backing out. And what did we see happen? Prices plummeted. And again, like, people would think, say, well, yeah, those greedy mills or whatever. It's not what's going on. I mean, you have to understand this is a supply demand issue that has taken place. And if I have been reporting on it for almost a year now, talking about the curtailments and shutdowns that have been happening, it's no surprise that we are now experiencing some of the things that we are. And if there is any pop to demand, if the interest rates come down and people really want homes and the home builders are seeing the traffic of buyers coming into the market, they're going to want to ramp up production. I mean, home builders want to build. That's what they do for a living. They want to put a product out there, but they don't want to put a product out there if the buyer isn't there. And this is one of the problems that we are facing as far as the home inventory levels within the United States, is that the home builders want to go to work, but they don't see the buyer there. The buyer is saying, hey, I'm on the sidelines. I can't afford these higher interest rates. We can't afford it with our wages, all the other stuff out there. And the builders are like, yeah, very cautious. But the moment that switches and people are like, yeah, the buy is on, those builders are going to rush into the market and they're going to zap the inventory. I mean, I'm telling you now, it's taken place. This email that I just got is reflective of that. Price increases are imminent. They're just talking about the tariffs, but that's just on top of a bigger problem that we are facing within the lumber market economy. All right. What you all talking about? Where are you getting this bullshit from? What are you talking about? Okay, Joe, this is the very first comment I see. BS, again, a builder can go bankrupt. Where are you getting this BS from? Oh, are you making it up? I have no idea what that is supposed to mean. It was one of the strangest comments I think I've read. All right, moving on. What about metal studs? That is used in commercial construction. Yeah, I don't follow the metal stud market. I follow the lumber industry because I live in the Pacific Northwest. I know mill operators, I know loggers, I know truck drivers, I know other retailers. I know so much about the lumber industry, but I don't know a whole lot about the steel industry. Right now, I do sell steel panels and I do sell, other steel components, but my focus is in on the lumber industry because that's the industry that I'm closest to. All right. We need more likes, guys. Yeah, 288 people with 61 likes. Go hit that like button. So what are you saying? Okay, UE, when would be a good time to invest, now or after 2025? In what sense? Like, I mean, invest in what? I mean, it's always a good time to invest in something. There's got to be something out there that has a buying opportunity. I know I just bought a semi-load of hardwood logs delivered, $1,000. Now, green material replace a lot of lumber. I don't think so. Like, I think in the building industry, like when it comes to building a house, what green products replaces lumber? Like, I can imagine, like, you have like, particular forest industries that are a little more on the green side than, say, other types of like, there's the green stewardess like movement. I don't know, like people who are going to be like environmentally conscious about how they log and all this other stuff. Like, there might be that out there. I don't have anybody who is asking me for that. Occasionally somebody will come up and ask me about, a particular, style of plywood or something that's supposed to be more, environmentally friendly or something like that. Very, very rarely do I have anybody ever come up and ask me about that. It does occasionally, but for the most part, people who are building are not concerned about whether or not it's a green product or not. Not in my experience. I mean, it's very rare that actually takes place. Now, what is going to be pushed into like the green movement or whatever you want to call it, right, is going to be cross-laminated timber. Cross-laminated timber industry is going to be running very prevalent within the building industry, especially when it comes to doing things like apartment complexes, hospitals, schools, any kind of institutional buildings. They're going to be more, you're going to find more cross-laminated timber projects that are going to be very prevalent within this economy, within the building industry. And mainly because it's being pushed as that green product, and it's also taking what would be a product that would not be suitable for lumber use, but then make it suitable for the cross-laminated timber industry. So now it's taken like an inferior product and making it a superior product to what we had experienced in the past. So as these cross-laminated timber industry becomes more prevalent within the market, it's still going to be part of the wood industry, like part of the forest industry, part of the milling operations and stuff, but it's not going to be the same in which that we get like material delivered to a retail facility, which then gets busted into smaller pieces and delivered as packages out to the job sites. It's going to go right from the mill to, if it's not already at that facility, into production of the cross-laminated timber beams, and then delivered right to the job site and assembled. So there's no fabrication really taking place on the job site itself. All that takes place at a factory and then gets shipped into place and like put into place like any other kind of like a big giant erector set that's already pre-cut pieces. So this is really where I see the green movement as far as like building industry and how that's actually going to apply to the forest industry is going to be moving more into the cross-laminated timbers as opposed to like, stick-built homes, which there will be like, they can build residential homes using the cross-laminated timbers, but it's not nearly as much as it would be like a apartment complex or, high-rise building of some sort, an office building. All right, moving on. Wayne, remember a big part of the Queen investing in the West firm, aka America, big trees for ships. Europe was deforested by then. Canfor just closed a big mill here in BC. I think they closed two. They closed two up there in British Columbia, and then they're curtailing development down in the Georgia area. If I remember right, it was Georgia, or at least down in the south somewhere. All right, all the white oak is being used to make whiskey barrels. Yeah, see, Brad, like white oak is a hardwood product, not a softwood product. So that's a completely different industry. They don't mill up oak. I mean, there might be some people who do, but they generally don't. They don't mill up oak boards for like framing material. And like I'm saying, there probably is houses out there that are framed in oak, but for the most part, if you're going to go down to the lumber yard, you're probably not going to be buying oak studs, right? You're going to be buying pine or fir or hemper or spruce or something of that nature. All right. White oak is beautiful, smells delicious. Yeah. Used for a lot of furniture products, though. Yes, it is. Absolutely, it is. Time to bring adobe and tree forts back to the housing market. Yeah, I don't think that's going to be a real answer. All right, I ask about VOCs all the time, and products used to be everyone knew what they are. Now, not so much. You talking about the volatile organic compounds? Basically, how much they smell. All right, the off-gassing of the formaldehydes and the glues and the adhesives and everything, all the stuff that's within that. Yeah, there's some people who do bring it up saying that they're, very sensitive to the VOCs and stuff like that. But, I mean, considering that I have been in this building industry game for like 30 years, very rarely does that actually have any kind of real concern when it comes to building a home. Most people are just looking for the cheapest products that are going to pass inspection. Off-gassing, yeah. All right, furniture is made from sawdust nowadays. Yeah, it is. There is a lot of MDF products. In fact, MDF became very short supply during the pandemic, as a lot of these like MDF products and stuff like that are made in foreign nations where like the environmental impact on it is not so regulated in those areas, and then they get shipped to us. Now, we do manufacture that kind of stuff here in the United States as well, but when you have a foreign product that is coming in to supplement the supply that you have, and all of a sudden that gets cut off, Boom, right? All of a sudden, these domestic manufacturers are charging a lot for their product because there's not a lot available out there, and people, again, are willing to pay the price for it because they're probably in an inelastic demand for it. And we've seen like MDF prices on like sheet goods really jump up. And considering there wasn't a lot of demand for it at the time, the people who were producing that, or I mean, not at the time, after a while, right, and the demand fell, now you have sheet good producers who are suffering with the fact that there's not a lot of demand for their product out there, and they shut down production of it. In fact, we experienced that just recently here in Oregon. I think Rossberg just shut down their operation, and they were a huge producer of like melamine shelvings and, you know, OSBs and particle boards and stuff like that. So all of a sudden, here's this supplier who was like, you know, very prevalent within the market is no longer there. We experienced that with OSB at the end of 2019. OSB product prices were very low at the end of 2019, and those who were producing it, there was, you know, a couple of operations going on back east, both in Canada and in the United States, but mainly it was up in Canada. They made the announcement. They were like, man, these prices are not conducive to our profits. We are going to shut down operations. We are going to pull hundreds of billions of square feet of OSB off the market. Now, at the time, I did a video of it, and I was like, man, this is going to be devastating to the market. But then we had the shutdowns and lockdowns, and, you know, all of a sudden prices were just collapsing all over the place. Well, plywood shot up to $80 a sheet. This is something like if you take a half-inch CDX plywood, which be, you know, your typical sheathing. So if you can imagine like the skeleton of a building, and then you got this the sheathing that goes on the outside. That's like the skin before all the doors and windows and siding. That sheathing, which a half-inch CDX is very typical, would sell for around $20 a sheet. At the height of the pandemic and the shortages, it was selling for $80 a sheet. $80 a sheet. In fact, almost all plywood became the same price. It was somewhere between $80 and $100 a sheet, no matter what it was that you were going for. If it was half-inch CDX, if it was three-quarter CDX, if it was three-quarter oak, if it was, it didn't matter. All of it was selling for $100 a sheet. And OSB shot up there as well. And now when you think about OSB, typically would sell for somewhere around $15. Like I've seen it as low as, like I remember when I first started in the lumberyard, it was around $5 a sheet, right? But anywhere between 10 and 15 would have been like a typical price that you would have expected to pay. I've seen it before the pandemic go all the way up beyond $20 a sheet. During, like, say, prior to the great financial crisis, it had peaked out at $20 a sheet for a brief moment as there was a lot of demand for it. But it doesn't stay at that price very long. Right? All of a sudden, inventory levels came back, prices collapsed. Well, when you got into 2019, you have to think, prior to, like, in 2018, there was a lot of demand. Lumber was at $650 per thousand. Everybody was going crazy building and all this other stuff. Well, all of a sudden that came to an end. In 2019 was a very, very bad position for a lot of these producers. These lumber mills and plywood mills were in a very tough position in 2019 as the prices had completely collapsed. Well, if you're not profitable, you're not going to produce. In fact, you'll just run out of business. And if you find that, man, there is far too much product out there in the market, you're done, right? Get out of the game. And so this is what happened at the end of 2019. They recognized that there was too much product in the system, that there was too much production available to be had. Like people could produce all kinds of plywood and OSB. They're like, that's it, we're done, we're getting out. So they literally pulled hundreds of billions of square feet of production out of the market, saying we're not going to do this anymore. Well, here it is 4 years later. Prices of lumber have come down, but yet plywood seems to be still elevated, right? You got CDX selling for $30 a sheet. I have a hell of a time finding OSB. We were offered a pretty good deal on a couple of units that are available through one of our vendors, but they are saying they're getting nabbed up fast, and if you want some, you better get it because we don't know when we're getting more. And that's not a surprise. To see that this is now taking place. I even asked, like, how far out is plywood getting? And, their reply was, if you need it, you better order it because it is getting extended. The order files are moving out. That means that there is a lack of inventory in the market for immediate prompt delivery. Considering there's not a lot of demand for it, that is a scary scenario. That is like, this is something that you are not going to find articles. You're not going to find anybody else talking about it. I mean, maybe you might find somebody else talking about it, but very few people are in a position in which that they not only see what's happening on a macroeconomic scale, but then also have access to so many different people within the market in order to ask them questions on what it is that they are seeing, to compile all these views into what it is that I'm now seeing happening within the markets. You know, I mean, ultimately, if you need lumber, I wouldn't wait. There's not a lot being produced, and the demand for it is probably going to increase, especially if you do see interest rates coming down. People are going to want to take advantage of those lower interest rates. And again, if they start buying into the housing market, then the builders are going to want to take advantage of that as well. They're going to ramp up production and boom, zap the inventory, and prices will move. You know? It's like you can almost write it out. All right. Please hit the thumbs up. It's free. Yes, please do. Wayne, half of the houses I grew up in was made from boxcars, railroad yard, half a mile away. Lots of houses I remodeled have been built from reused lumber. Yeah, and that's like, like I'm from a very old area. Astoria is like 200 years old. And one of the guys I was talking with today, because he was asking me about lumber prices and what to kind of expect in the future, and he says, isn't this place kind of weird where I'm really busy and all this other stuff? And I said, no, it's not. It's not weird. We're not a location that has a massive amounts of new build. We are very limited in space. We're an expensive area. It's like, it's not, I mean, we have new builds constantly happening, but it's not like, places that you could go to in like, Texas or wherever, there's like just massive houses that are going up. We don't have that kind of environment here to have that sort of building thing taking place. But what we do have here is a constant state of disrepair because the homes here are 200 years old, right? Or I mean, there's new modern homes too, but they're, it's an old town. So it's constant. Remodel is constant. Repair is constant. It's always here. And that's pretty nice for, somebody who's in the game. But now when it comes to finding new labor to come in and say, hey, like we want to build a bunch of new houses or something like that, we need labor to come in and put these houses together, there's nowhere to live. Right? There's nowhere that you're going to be able to rent a place to live at. So these laborers can have, a residence to be at while these homes go up. There's just no place to be. So you're going to have to pay them a lot, which means that the homes here are going to have to be, selling for a very high price. And they're not going to be able to build some simple home that's going to be easy for somebody to get into. They have to build a very big, expensive home in order to acquire the margins that they need to be profitable. And that's like the situation that we're in here, which is so different from what a lot of places would be experiencing. New homes are built like garbage unless you get a top builder. Yeah, I kind of agree with that. I mean, they have a tendency to slam houses together. I live in Louisiana and the timber industry is doing great. I would go and take a look at some of the mill operations that are happening there in your area. There is announcements of mill curtailments and shutdowns that are taking place in your area as well. So just because you happen to see loggers and truck drivers and you see it moving across your view doesn't necessarily mean that these mills are in operation and being profitable. $480 per thousand is not a position in which that these mills are doing well. We know this from back in 2019 when it bounced between 300 and 400 per thousand, and mills all over the place, not only in Canada, but in the United States as well, were shutting down production. That was at 300 to 400 per thousand back prior to all the inflationary scenario that we had experienced during the pandemic. So you think about it, all the input cost that goes into the mill, the added labor, the added transportation, the added, energy cost, all this added stuff that goes into the mills doesn't leave them in a position in which that 300 to 400 per thousand is going to be profitable. In fact, 400 to 500 per thousand isn't profitable. You have to get over 550 per thousand before the mills start getting somewhat into a position in which they say, yeah, this operation is actually profitable. And now, what do you see? If it gets under that particular level, they're like, we're backing out, man. We are not going to be producing a bunch of lumber. We are not going to sit there and load up on inventory just because, we can do it or whatever. That's like, that doesn't make sense. Like, why produce something that doesn't profit you? It doesn't make sense at all. What does make sense is that, hey, guys, we got to cut shifts. You're going home. We're, doing layoffs. We're going to back off on production until the inventory tightens up and the prices move up. That's not hard to see, and it's not anybody you can blame. Like, people are like, blame the mills on this, and I'm like, why? Don't you think that they should profit? I mean, to me, they're a business. Like, it makes sense that they should profit. And when people say, well, they were profiting plenty at 1,700 per thousand, that is not true. There was not a lot of lumber selling at 1,700 per thousand. There was some. There was people out there buying it. But for the most part, that was very, very small amount of inventory movement taking place at that time. I know. I was trying to sell 2x4s at $13 a piece. A 2x4 8 standard and better, which I sell today for $4, $3.99. We had a price tag on it of over $13. Do you know how many 2x4s I was selling at $13 a piece? Hardly any. I mean, hardly any. The only people who were buying them were people who had absolutely no other choice but to buy them. And so we had units of lumber sitting down there for a while. And then when the prices did start to fall, we had to take a beating, because you have to have inventory. So you bought that expensive lumber, but then the prices drop and now your competition is lowering their prices. What do? You have no other choice but bleed. So you start dropping the prices and you dump out that expensive lumber as quickly as you can for the most that you could possibly get for it, so you can go and buy cheaper lumber and replenish your stock with an available, profitable material. And that's like, on the way up, it's no big deal. And I mean, prices move up. No, like, you can buy lumber, move up the price. Hey, everybody's profiting. Everybody's cool with it. Competition is causing the prices to move up. Everything's great. But the moment that it starts going the other way, it can be devastating to lumberyards. And in fact, when that happened, there was plenty of reports of lumberyards shutting down their operations because they were sitting on expensive lumber. And then when the competition was able to bring in cheaper prices, they were stuck at the high prices, and that was it. They were done. They're like, okay, we're out of business. And that happened, quite a bit. Like, I don't blame greedy corporations on any of this stuff, because I was able to see it so far ahead of time. And I was calling it out. I said, warning, plywood is coming up in short supply. It's going to skyrocket in price. Get it while you can. And when I said that, I mean, I'm talking before, even now, I wouldn't hesitate too much, because I can't imagine the prices are going to be coming down that much. But at the time that I was saying that, people were screaming greed and manipulation. And I'm like, it's not. It's lack of the material, right? It's a lack of being able to be profitable at that lower price. And this is the experience that we ended up having from it. All right. I used to live in Phoenix, Arizona. I get about 10 homeless people begging me for cash every day in Michigan, maybe once a year. Well, go down to California, where it's really private. See, the thing is like, if you go to areas of luxury, you are going to find massive amounts of homelessness, right? Because anytime you ever have a place of luxury, you have separation between the rich and the poor. If you have places of production, then you are going to find working class people and less homeless, because people will have the opportunity to then go and get a regular job and have a regular standard of living. But if you go to a luxurious area, you're in California, one of the San Francisco, LA, whatever you're at, you have a bunch of luxurious lives. People live in fancy apartments. People live in, have fancier cars. They eat at fancier restaurants. They wear fancier clothes. They all have fancier jobs. And all this fancy luxury then has a separation between the rich and the poor, as the people who have regular jobs where they're working those restaurants and they're working the gas stations and all the other stuff, they cannot afford to live in those areas. And so what ends up happening is that the people who are there lose hope in the ability to then go out and get a job and try and make their way in the world. They just get frustrated and give up. And so you have a rise in the homeless community anytime you ever have a luxurious area. It's just like, even our area here is very much becoming a trendy, higher end, property owners who are now part of more of the hospital district and the remote workers and all the other stuff. Like, my town used to be a working class town. It was loggers and fishermen, and that's what made up the major part of the community. But that's not the prevalent property owner anymore. The prevalent property owner is a remote worker, or somebody who's working for the hospital district with a higher wage. These are the new property owners. They've elevated the price of the homes around here, and now the working class citizens are like, man, I can't even buy a house in my hometown. I mean, I know I was one of them, right? I mean, if it wasn't for the fact that I had a YouTube channel at the time, I would have had to leave the town that I grew up in because I just simply couldn't afford to live here. The house that I had purchased just a few years ago is now priced out. I could not buy my own house at today's, not only at the price that it's ZELLE estimated at, but even at the interest rates. If it hadn't had an increase in price, I would not be able to afford the interest rate on that home, and I would not be here. I would have to have left, right? Because working class jobs just don't cut it anymore. And that's where you're going to find in a lot of places out there. So yeah, homeless in California, very prevalent. You go to some place where it's a working class town where they're producing and making things that are distributed out there to either the rest of the country or out even better to the rest of the world. You're going to find that those jobs will meet the standard of living requirement. Like, it'll pay for you to have a house and a family and all that other stuff. But you go to some place like we're here, not a chance in the world. Not a chance in the world. All right. Would you ever think about selling and moving somewhere else? No. Like, I don't. I don't think about selling and moving someplace else because I don't know where else I would really want to be. I really enjoy my environment here. I enjoy the weather. I mean, even though it rains 9 months out of the year, I'm cool with that. I like it. I like the people here. I like how clean and friendly and safe, and my boy is in the same school that I went to. It's just like, some of the faculty is still there from when I went to school. That's what's crazy, is like, I'm almost 50 years old and there's people who were there when I was there. Yeah, and it's just like, wow. I mean, that's like cool as hell to see. So I wouldn't get that experience anywhere else. And no matter what, and it could be an awesome place to be, but I would not be able to get that same experience here. So I'm like, my house that I live in now is literally like 2 miles away from the house that I grew up in. I don't even think it's 2 miles. It's probably like 1.5 miles away. Like, no, I wouldn't consider living anywhere else. Now, I would consider renting my house out and, say, getting an RV of some sort and traveling around and, going visiting the country, but I would want my home base to be here in this area. All right. Do you know of an ETF or other options and retail investors could buy into the lumber without actually taking possession of it? Okay, Brad, I don't give investment advice. There's a couple of ETFs, Wood, WOOD, and NAIL, NAIL. So go do your own research on it, figure out whether or not that's something that you would want to get into. Evening Soldiers, good evening. All right, Wayne, Patrick Henry, big part of me thinks that too, but then there's a part me thinks something gonna happen to the money currency units in war. All right, the traveling UE, yeah, I would love to do it. Rooting for the RV. Yeah, sometime. I got to raise my family up. My boy, he's got another 10 years or so. And once, the family is raised and, all that stuff is going on, then, yeah, I'll free my time up to go and travel and do some other things. But at this point, I'm going to stay close to home. Historically, lumber before 2020, the cost per thousand bounced between 200 and 400. Why can a lumber mill not profit around 500? First of all, you're a little inaccurate when it comes to the 200 to 400 price tag. Now, think about it. There was a huge increase in the prices starting probably back in around 2015. And it started moving up into 2018. Now, during that time, 200 per thousand was not a profitable position. In fact, 400 per thousand really wasn't even profitable for them. Once they got over 400 per thousand, that was profitable. So no, they weren't profitable under that. There was mill curtailments and shutdowns and depletions soon as they hit the 400 mark. Like that's not profitable for them. So to assume that it was, it's not. Okay. Do you think your kids will want to stay in Astoria? No, one of them wants to leave the country altogether, and the other one, I don't know, he's probably going to be a baseball player, so he'll end up wherever he wants to be, whatever city will take him, I guess. What do you think about buying land and going in a homestead farm direction for 27-year-old male, and should I finance some of it or buy smaller cash? I have $30,000 saved up. I don't know, bro, man. That's up to you, man. I mean, if that's the life that you want to live, then I say, yeah, go for it. If I was 27 years old, I would figure out whatever I could do to acquire as much property as I could. Okay? That's probably what I would do at 27 years old, especially if I was very ambitious and had carpentry skills. I would buy property. I would buy as much property or get into property as soon as possible, because everything is about being the property owner. You think about it like right now, how hard is it to become a property owner? Do you think that's actually going to become easier over time, or is that going to become more difficult? Think back how easy it was back in the 50s, 60s, 70s to get into property. Think about how difficult it has become. Does that seem like it's going to become easier or harder going into the future? Think about the taxes that move up. People can no longer afford the houses that they have purchased just simply off the taxes. Only the wealthy will be able to afford that. This is the type of environment we are moving into, is a concentration of property owners. If you are not going to be a property owner, you are going to be left behind. That's all there is to it. Now, you don't have to be the property owner. You can be a capitalist. You can invest in the dividend-paying stocks or businesses or, all kinds of places that you can put money that will have a return, right? You put your capital to work out there. That's the capitalist. Go out there and invest into things that are going to have a decent return to you. You're going to have to get good at that. Learn the skills of trading. Learn the skills of understanding how to read whether or not a company is going to be profitable. Figure out whatever the next trends are going to be. These are the type of things that you need to do as a capitalist if you're not going to be the property owner. But I've been to many economic conventions. I have spoken with many millionaires. I know a lot of people out there who have done quite well for themselves, and almost all of them did it with property, did it with real estate. Like, very few of them I know said, nah, I rented my apartment and I was a capitalist the entire time, and now I'm a wealthy mega millionaire. I don't know too many of those ones. That's not very frequently found, right? Not saying that it can't happen. I'm just saying I don't know that many. Most of the people I know who did very well for themselves all did it with real estate, every one of them. So to reinvent the wheel is not, I don't know why you would want to do that. Like, these guys have already shown the way. They've shown you what the steps are that are needed to be taken in order to separate yourself to put yourself on the correct side of the wedge, right? This is really what it comes down to, figuring out how it is that you're going to be that property owner, or understand the capitalist, be the capitalist. But if it was me, like me personally, any opportunity that I would have in order to get property, and I'm not just talking desperate move to buy property, I'm talking about like a legitimate, like, this is a decent return, this is a good investment, this is a smart idea. If I had the opportunity to do it, I would jump on property. That's me personally. Now, I didn't always feel that way, but the more that I start to do this research and the more that I'm realizing the separation between the rich and the poor generally comes down to the property owners and everybody else, then I probably want to be on the side of the property owner. That's just like, read this essay. Cantillon's essay on economic theory. He refers to three people who live independently of the state. right? The capitalists, the property owners, and the prince, whoever the hell that's supposed to be. And I'm assuming, because somebody had actually mentioned it up, saying like it's probably like generational wealth. And I would agree with that. So if you're not one of those three people, then you're probably on the bottom side of the wedge. That's all. I mean, being at 27 years old, if you're in your 20s, dude, think about that, man. Think about what it is that the people who are on the other side of the wedge, what they have done in their life, and most of them are probably property owners. Crowd buying is like a timeshare. Hey, space. Property values. At 52, close to a millionaire by stocks and real estate. Yeah. Now again, it's just like, you're when I say get into it, what I say is understand it and why you're getting into it. Don't just blindly throw money at these positions. I stack cash. I stack a lot of cash. Like, I don't know, a lot of cash. I try to stack a lot of cash. And for one, I'm not one who looks at cash as trash. I don't see it that way. Right? I see cash as something that is meant to take my goods and services to other goods and services. And if there's buying opportunity coming into the future, I would love to take the advantage of that. So understanding that's the position that you have to take. If you do not have an active investment in which that you are moving that cash towards, understand that that's what the position that you need to move towards at some point, right? And that sitting around waiting forever is not a plan, right? It's not a plan at all. At some point, you have to start jumping into the game. I dollar cost average. I dollar cost average into stocks. I dollar cost average into Bitcoin. I buy silver whenever I can. It's not something that I even think too much about as far as like whether or not it's going to be a profitable position. I'm dollar cost averaging, so I know that I am just acquiring this, this position at any given time. And again, when it comes to real estate, I was nervous as hell as buying my house, and I didn't think I was buying it at the right time, and I thought for sure that prices were going to crash. It went completely the other way. Like, I bought my house and the price went up dramatically. And now, because they required so much of a down payment from me because of the foreclosure that I had in my past, I am so far from being underwater that I don't even have any concern about it whatsoever. Like, none. Right? And again, like, I was nervous as hell. I didn't want to do it. But now that I've done it, it's the best decision that I think that I've ever made. And I felt like I was forced into that decision. It wasn't even like a decision. I felt like literally I was forced to do this. What time is it? Ah, crap, guys. I got to go. This went by so fast. 47 minutes and it's over. My gosh. Alrighty, guys. You're all awesome. Thank you so much for being here. In short, more people, more problems. Grow food. Yeah, for sure. Definitely grow food. Deja vu. 50,000 to 30,000 in 20 years. Did I make bank yet? Right? See, now being the property owner, like at the time, 20 years ago, buying that $52,000 house was probably a fairly scary, well, it may not have been for you, but like for most people, they're like very fearful of like, man, is this the decision that I should be making? What if, what if, right? All these what ifs that start happening. 20 years later, you're going, wow, man, all those what ifs gone, right? Absolutely gone. What exactly do you mean by dollar cost averaging? Dollar cost averaging means that you buy a little bit consistently, like once a week, once a month, but you don't think about the pricing. All you do is you put your same amount towards it. So what will end up happening is that you will buy, like, let's just say stock, for example. You're buying into a particular stock that you want to get. You're buying $50 a month for every month for a couple of years. At the end of that 2-year dollar cost averaging, you will have a particular price that you had for an average. If you took all the pricing that you had paid for that stock and you average it into a single price that you had paid. Now you will find that generally over time, the stock has moved up, and because you dollar cost average, even though you might have bought at a high and you might have missed an opportunity at a low or something, over time, your average has done very well to the price of the stock. Now, you could have timed it and done much better, But dollar cost averaging means that you didn't really think about what it was that the price was at. You were just accumulating the stock. So same thing, you can do it in the reverse, dollar cost average out. So that's dollar cost averaging in, you can dollar cost average out, where you start selling. Like, price of stock goes way up and you're thinking, man, I want to sell out, but I don't know if necessarily I want to sell out all at once. Right? There might be opportunity in which that it could go up even further, and I don't want to miss out on that opportunity, even though I might miss out on the opportunity of selling at this peak right now, right? So what you do is you start dollar cost averaging out. You sell at the peak, you sell on your way back down, and you will find an average sell price, and hopefully that will be higher than your average in price. Right? Dollar cost averaging is just making sure you buy consistently, and then having an average of what you had purchased over time. Does that make sense? I was trying to explain it simply. I don't know. I think I got a little complicated. I got to go, guys. Uneducated Economist. You let me know.